We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we have BBIG, and we're going to talk about one of the top stocks setting up to possibly squeeze if this actually is not a bull trap. But before we look at everything here, the data and information on the charts, I want to share with you guys the home runs of the day and the stocks I mentioned this morning, how they played out through the turbulence of the market. And we're going to get right into it here with BBIG. So after all the turbulence in the market and actually most stocks being in the red and the S&P 500 index currently in the red and pulling downwards in the morning and the pre-market not looking so filled up with volume, if not kind of stagnant, there still was two home run opportunities that were able to be found, and it did not go up in a straight line. It took dedication to the charts and effort to catch the dip to the best of one's knowledge and ride the rips. So if this is something that interests you, I would like to invite you to join us. The link is down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So this morning, I was watching ADAP, RNXT, AEHR, and the other one was right here, which was right after the bell. And that was OPAD. We're going to look at these charts together. The worst performer was RNXT. That one had a small jump of about 5%, and then it just started pulling downwards and having small jumps of 3 to 5%. So the worst performer out of this list here, though, is AEHR. Okay, this one was caught right as it was pulling downwards towards the bell, hit a bottom there, and skyrocketed for a 10% move in a matter of minutes. That was about 15 minutes to 20 minutes after the bell. Then it pulled down and took off for a highest point of 15% plus. And this is what it's all about. 5 to 10% on a regular day, 10 to 20% on a great day, and 20% plus is a home run. So this is one that I caught as a halted. It was very risky, pulling downwards when I mentioned it, and it skyrocketed for another jump of 5 to 10%. Then it pulled down for a couple of hours, and after bottoming out in the middle of the day, it reversed and gave a highest point of 20% plus. And you could see it here with 42 vision, how much strength it had in the pre-market towards the halting, the pulling back, jumping up a little bit, and the rest was just weakness. And this seemed to have been the bottom within this area, and it reversed for a highest point of 20% plus. Now the other one was ADAP. Now this one right here caught this one as it was running right in the pre-market. It was overextending. I stated I was not going to chase it or FOMO. I'm going to watch it carefully. Pulled downwards, and this seemed to have been the bottom right there because it touched a little bit below that, right? 560, 559, and then it reversed, and that was right there around 565, 563. That was just a few cents off that first bottom. It had small jumps of 3 to 5%. Almost reaching 10% within those first couple of minutes, an hour of the day. But after that point right there of that 560, 559 range, it reversed and gave a highest point throughout the day of 20% plus. It's all about catching the dip and riding the rips. And you can see how it went and shifted into strength throughout the day and how it was going into weakness here, tried to come back up, continued weakness, and then the reversal. So if you want to be able to see completely what's going on with these opportunities, you can join the 42 Vision tier level, which gives you access to the Discord, Patreon, which is the daily watch list, weekly watch list, and the 42 Vision indicator, as you can see it here, showing you in the candles based off specific levels where the momentum is heading. Let's go ahead and jump into these charts. So here we are with BBIG, and BBIG stock is actually pushing up higher. One of the biggest things that I noticed back when BBIG was in this downward channel is the fact that it was going in this direction, right? Like when you actually go ahead and zoom out and look at this from a bigger picture perspective, right? And you paint this out, you could see there that it kind of broke out of that area, right? Like you had this here, this bottom here, this bottom here, this top, and it was kind of narrow, okay? And then we saw things actually kind of push upwards on that date. So then if you kind of do this right here, you can kind of see that it was in a channel that was possibly eventually going to go in that downward direction or break out of it. And it certainly has. It finally broke out of it with that consolidation. And you could see here right? This curvature right here, it didn't keep going like this. If not, look at the curve that happened here, and it's kind of holding itself up sideways. That strength right there of sideways action is a pretty good sign of a possible run, or at least a catalyst that's holding this up till the next run. And we're seeing BBIG right now running, okay? So this was in a very bearish channel. Things have actually turned around. Possibilities are limitless with this because of the fact that there's so many variables. But one of the biggest things right now is the short interest that this has, and how it actually is no longer like available, like almost like some covering is happening as I speak. And even in this run here, it has to be some covering, and it seems to me as a bull trap if it does not come with enough strength. And one of the biggest things that you can tell about strength is the amount of volume, okay? 88 million. The average volume in the last 10 days is 140 million, okay? As this keeps getting weaker and this does not get crossed and this gets smaller and smaller, this is in weakness, and these could be bull traps, the small spikes that we'll see, unless the momentum continues to break out. And we have some key levels to look at here in the chart to distinguish if this is really a bull trap or if it's coming with some strength and how it reacts within those areas. So the first thing is, here you could see the short shares availability is 200. So some of them have been thrown back in. Remember, it used to be 0, okay? Some of them have been thrown back in to circulation. Then we have the borrow fee rate, which is what a lot of people kind of guide themselves with, saying, you know what, 111% is high. Who in their right mind is going to want to short this, right? So some covering is probably going to happen. But the other thing too is the short volume daily has gone down. Like, look at these numbers here, right? All the way back here, and look at these numbers right here, okay? As this number keeps on getting lower, that's going to be something to be aware of and something to watch. Then the other variable here is the fails to deliver, okay? They're not as high right now, okay? As way back here in July and the beginning of August, the middle of August, and how it's been. And the last time it goes back to is August 13th. We're in September. So that's something to be aware of as well. This is delayed, and these numbers have gone up pretty high, okay, based off what they're showing, and there's no new data since the 13th. So you can imagine how astronomical those numbers are with the line moving, okay? So super important to be aware of that. Fails to deliver. All that has to be actually taken care of eventually. The borrow fee rate, and then we have availability of short shares out there. So it's important because with short shares getting available again, either they can reshort it at the newer highs, or some covering is happening and it's being thrown back into the market. And that's something that creates a huge variable in the circumstances the stock is in right now. Okay. When you go back to the chart is fighting, right? If it doesn't break through this high here of 952 and then back up here to 982, and then obviously 1051 is key. It got rejected twice there. If it can't break through those three levels, this is not going very far, and this could be a bull trap. The next point is the highest point that it reached, 1192. If that gets broken through, this could go to newer highs, new resistance levels beyond what we see. And when you look at it from this perspective now, how it's drawing out, right, which is right now in the situation of a possible bull trap, it goes to show you that, like, oh, there's a move here. Wow, it moved up. Oh, there's another move here. It's kind of moved up. And it's doing the staircase effect, right? And what a lot of people are hoping for is another staircase up here to continue the move and go up higher. And that right there is how these bull traps are formed. But the stock is pushing, and it's going to be important to watch it and monitor it closely at these levels. But the risk is so high up here, okay? It was very different way down here. It was very different up here at $5-7. Even this pullback here to 547, and then when it took off, nearly doubled and a half. But at these levels here, the risk is just so much higher. So either this could be a potential squeeze happening right now, right before our eyes as we see it, right? Because it went into weakness here, and there's been a lot of shifts here, and it's going into strength. Or this is another bull trap, just like the ones that we saw here when this ran up, and then it fell down, and it's just going to continue this direction. So when you look at it from here to here, it looks like that. But when you look at it from the opposite direction, right, and you go ahead and look at things, this could be one of those peaks, right, to the bottom side. And that's something to also watch and consider. But right now, this thing is taking off. This could be a possible squeeze as we see it. And then when you come over here, you could see that nothing's updated. And I find that very interesting. It's basically showing you certain key levels here that it needs to break through. If it breaks through 948, which it already has, and it's pushing upwards and it's leaving this behind, the further away it can get from this peak here that I drew from the peak here, and it continues to pull away from here, well, then this could be a potential squeeze happening, like I said, right before our eyes, or a huge bull trap. So super important to keep that in mind. And here there's no information. Short ratio is still pointing to 0.34. I don't buy that. That's different. And some of the covering is happening. If they're not showing the number anymore, which was nearly 50%, I'm sure it already went down to 40 to 30%, and some more covering is happening. And this is very risky at these levels. Super risky. But it's happening, and it's pushing. We'll see how it goes. I look forward to seeing your thoughts down below. And remember, it needs to break through these key levels. It's already broken through one of them. It got rejected there. If it can't break through it, then it's actually going to possibly go back down. But if it can continue, 1051, 1050, and then we got 1191, 1192, give or take. As always, thank you guys so much for watching, and let's make some money.